Hey guys, welcome back. So today in this video we're gonna talk about a very important topic, that is drawdown in Forex. So first of all, let's talk about what is drawdown. Drawdown in Forex refers to the percentage of the amount of losing trades in a row. It is the amount that has been drawn from your account after losses in Forex. So drawdown basically means, let's say if you have a trading account and you deposit some funds into that account. So whenever you open any position, there are two possibilities. The trade can either go in profit and it can also go in loss. So the drawdown is basically the amount of losing trades that happen in your account after opening the position, and it gives you an idea of how successful your percentage is, okay, or how successful your strategy winning percentage is. So now let's talk about the types of drawdown. There are three types of drawdown, and you should understand these terms in order to check the performance of a portfolio before investment or trading. Okay, the first one is absolute drawdown, the second one is relative drawdown, and the third one is maximum drawdown. So here you can see that I have drawn an image of each of these drawdowns, and we're gonna go through detailed analysis or detailed discussion about each of them, and also talk about examples so that you can understand them. So first of all, let's talk about the relative drawdown. The relative drawdown is the difference between the maximum equity high to maximum equity low. Remember that I have used the term word equity, which means that unrealized profit or loss. Okay, relative drawdown is measured on equity. It is not fixed drawdown. So the relative drawdown is calculated when you still have open positions in your account, okay, and all the trades in your account are not concluded. Whenever you open trade, there is a floating profit loss and your equity is changing all the time, okay, with the floating profit or loss. So the relative drawdown is calculated on that equity. Let's talk about the formula for calculating of relative drawdown. The formula is maximum value of equity minus the minimum value of equity. So this would give us the value of relative drawdown in terms of dollars. And if mostly traders use the drawdown in terms of percentage. So in order to convert this into percentage, what we can do is maximum value equity value minus minimum equity value divided by the maximum equity value, and then multiply it by 100. So that's how you can calculate the percentage of relative drawdown. Now let's talk about the example of this relative drawdown. Let me just go to the next slide. So here, let's say you deposit $10,000 in your trading account and you open any positions. So in the next 60 minutes, let's say the account goes towards this 9.5k. So it means that this is in loss. And then after that, the trade is not concluded yet. Okay, after that, the account goes towards this 10,500 level, okay, or makes this level. So still the trade is not closed. Okay, the trade is still open, but we can calculate the relative drawdown by subtracting this trough value from this peak value. The peak value was 10,500 and the trough value is 9,500. So the relative drawdown in this case will be $1,000. Okay, and remember to keep this in mind, that position is still open and this relative drawdown is changing all the time. Whenever the account, there is a new peak or new trough in the account. Okay, so you should always keep that in mind, because you might confuse the relative drawdown with the maximum drawdown. So these both are different terms, so you should always keep that in mind. The next type is the absolute drawdown. The absolute drawdown is the difference between the initial value to maximum loss in an account balance. And the absolute drawdown, the formula for absolute drawdown is initial balance minus maximum loss in the initial balance. And as I said, as first we calculated this in percentage. In order to calculate the absolute drawdown in percentage, what we can do is we can subtract or use this, divide it by initial balance, and then multiply it with 100 in order to get the percentage. So let me just go to the next slide. Here you can see that in this case the starting balance is $10,000. Okay, and after opening the trade, let's say the trade goes in the bearish direction and or it goes against your position, so now you have a loss here. Yeah, let's say the trade gets concluded, and here you can see the account balance is at almost the same level. So there is a low that was made during your trading session or your trading activity. That low is at value of 9,000. So your starting balance was 10,000 and the loss that happened was $1,000. So here we can subtract 9,000 from 10,000 in order to get the absolute drawdown, and it would give us the loss that happened in your trading account with the open positions when they got concluded. Okay, so the percentage of the drawdown in this case will be 10%. Now let's talk about the maximum drawdown. Okay, so here keep that in mind, that this, you might confuse this with relative drawdown, but these both are very different, because the relative drawdown is calculated only when there is an open position in your trading account. When all the trades are concluded, then you can calculate the maximum drawdown. So the maximum drawdown is the difference between an all-time high to all-time low of an account balance, and the formula for this is all-time high balance and minus all-time low balance. And in the similar manner, you can convert this into percentage by dividing this by all-time high and multiplying it with 100. So now let's go through the example of how you can calculate the maximum drawdown. So let me just go to here, and here let's say you have the $10,000 in your trading account in the initial, and then you open some trades. During your trading hours or during your trading journey, your account goes in the loss at the first moment and makes this trough. So now let's say at this moment you have $9,000 in your trading account, and after that what happens is the trades go in your favor, and then your account grows. It grows to this level, which is almost the $11,000 level. So from here your account grows from 10k then to 9k, and then it shrinks from 10k to 9k, and then it grows from 9k to 11k. So here your maximum drawdown would be this peak minus this trough, and it is similar to the relative drawdown, but it is very different because this is calculated after the conclusion of trade. So 11,000 minus 9,000, that would be $2,000. So in this case your maximum drawdown would be 20%. The drawdowns are used in order to test how effective your trading strategy is, because if the drawdown is 30%, that does not mean that 70% of your trades will be successful. Okay, because let's say if you apply that strategy and the first 30% of your trades are in loss, then like what can happen is you need to calculate, will there be even enough money left in your account after losing the 30% trades? Okay, and that's why you should always keep an eye on the risk management and always trade in your account using the risk management rules. I hope you like this video. If you have any questions, please comment down below and I would love to answer them. Also, don't forget to visit our website www.forexbee.co in order to learn more about Forex and price action. You can also subscribe to our channel so that you'll be the first one to know whenever we upload new content. See you guys in the next video. Thank you.